companies, both of them had already been priced in over the last couple of weeks, where we've been seeing trades going up to $9 million in value terms in a market that's been trading on average of $4.2 million. The performance of these two stocks was actually flat, and the market closed down 16% lower on the day. And I think the general sentiment that's going all around from the institutions is that this is the last month for operations of the NSE on most global and local equities as the year comes to a close. So I suspect going forward we'll see slightly lower volumes, and I think the NSE will actually perform flat or near flat levels from where it is currently.
Well, let's touch on Cooperative Bank posting a 54% jump in pre-tax profit for the first 9 months of the year. Well, just looking at this company, I mean, obviously posting great numbers off a low base, clearly. Can it sustain those numbers?
I think next year is going to be a very interesting year. I think looking at the top-bottom overview of the Kenyan banking sector, this year the profits have been highly driven by the capital gains recorded on government paper, which most of these banks actually hold. But the other interesting thing is that the growth rates on the deposits have been slightly over 50% across board. And next year it's going to be a winner-takes-all for the banks that are actually willing to take risk and loan out the deposits that are actually sitting in their vaults. So I think the sustainability of the numbers that we are getting through in the Kenyan banking sector this year will depend highly on the risk management of the companies, and secondly on the effectiveness of rolling out new loans to the retail segment, which has been a key take of the loans that came through the market this year.
Well, what about non-performing loans and provisions for bad loans? Cooperative Bank posting a 7% increase in bad loan provisions. So clearly a little bit of a soft spot, not only for Cooperative Bank but other banks in the Kenyan market as well.
I think the Kenyan banks have been improving on their non-performing loans. What we've seen is the non-performing loans have actually been declining, and the banks have actually been pushing up their provisioning loans. So in terms of coverage, we're doing levels of slightly over 50% for the entire sector, which I think is good levels, because we're coming from a base of having high levels of non-performing loans in the early in the early 21st century and the late 90s. And the lower levels of the NPLs is definitely a testament to the improving economy going round, and also the confidence of the banking sector in terms of enhancing its loan credibility and loan access to the private households, which has been a key driver for the loans over the years.
Turning our attention to KPLC, we know the shareholders and the board have approved the rights issue. How do you expect KPLC to perform as we head towards the end of the year?
I think what will be interesting for KPLC is the fact that the government of Kenya won't be taking up its rights, and it wants to be diluted to a stake of about 51%. We are estimating slightly over 450 million shares that will come into the market, given the rights issue, which we think will open from 25th of this month. I think the excess supply will definitely be positive for KPLC, and it will give access to institutions to buy into the stock, and these are institutions that are currently not held in the company. I think the key thing about KPLC is the fact that it's the dominant distributor of electricity here, and it's been taking up different initiatives, like for instance Ketraco, which is going to be owning and putting up transmission assets. So the instances of profitability are definitely going to increase for KPLC going forward, and the only capital expenditure they'll be incurring will be more of a maintenance kind of nature, meaning that the incremental cost to the customer will be at a much lower pace than it has been in the last couple of years. So I think this is going to be a positive, and we'll definitely be waiting to see the details and the pricing, which will determine the uptake of the government supply.
Mbithe, we also had some economic data out today. Current account deficit narrowing to $1.75 billion in the year to July from $2.24 billion a year before, and also recording a surplus of $665 million in the year to July from a deficit of $420 million. So all round things looking really good from the export side of things. Of course, we have seen a massive change, not only from a weather perspective this year, but also various parts of the economy getting a nice boost.
I think the numbers that are coming through from Kenya from a low base last year are very good, and the onus is on the Kenyan community to actually position itself as a key investment position for funds that are actually getting their way into Africa. I think the beauty about the Kenyan investment space is the infrastructure, the strides that the government is actually taking in terms of supporting economic growth at the bottom of the pyramid. So we're definitely going to be positioned for stronger economic growth numbers going forward, and the onus is on us as an institution, as institutions, as constituents of the economy, to actually position the country as a go-to place in terms of foreign funds that are getting their way into Africa. But I think the story is definitely ripe, and it has more to offer going forward.